Good afternoon. Happy Sunday. Hope everyone's having a good weekend and enjoying themselves. As always, it is time to get ready for the week ahead. So let's go ahead and dive on in on some charts. Let's look at the economic data calendar, despite the government shutdown, and also the earnings calendar. And we'll also go over some really good setups that I'm looking forward to for the week ahead. So, without further ado, let's always start with the economic calendar and let's take a look real quick. Now, a lot of this stuff is pretty much tentative, which basically means it all depends if the government shutdown continues to progress. So, as long as that happens, then not much data is going to happen. But we do have the FOMC meeting minutes from the prior meeting from when they did decide to cut rates by 25 basis points. We also had one member who wanted to get 50 basis points. So maybe we'll get some more insight as far as things go. Usually it's it's not really a big event, but it could give us some further details on the whole meeting itself. So that will come out on Wednesday at 2 o'clock. There's no data on Monday or Tuesday. And then on Thursday in the morning, Chairman Powell is set to deliver some remarks, but when we look at it, it is a pre-recorded video for the Community Bank Conference, which is hosted by the Federal Reserve. I'm not really anticipating anything new to be said from Jerome Powell on this pre-recorded video. But it is something to pay attention to nonetheless, because it is Powell. He is the head of the FOMC. So yeah, we'll pay attention to it, but I'm not really expecting anything other than that. And then on Friday, we get our consumer sentiment and inflation expectations from the University of Michigan to close us out. Everything else, such as the non-farm employment change, the unemployment rate, that's pretty much in limbo just because of the current government shutdown. I've seen headlines and analysts say that they do believe that the unemployment rate is still at around 4.3%. So that's good. That would, mean that the job situation continues to be a little rocky, but nothing too serious at this moment. Again, the Fed is doing that really tough balancing act where they're battling weak jobs that we've seen on previous jobs data, as well as persistent inflation, which we've seen on the other hand, and the interesting whispers of stagflation, although what we are dealing with now is nowhere close to, the 1970s. So I know people like stagflation, but it's nothing like the 70s. So come on. All right. With all that being said, let's just go ahead and jump into the charts. As you can see, this is the SPY 1 hour chart. It is moving from bottom left to top right. We are in a clear bullish uptrend. We have these nice moves to the upside, followed by some basing out. So rally, base, rally is pretty much what we're dealing with. But I do want to zoom in here and get a closer picture of, what exactly we're looking at here. I do have support levels at around 667.67, followed by 662.14 and 654 as our near-term support levels. So if things do decide to push lower, I will expect some of these levels to be tested and to hold. Obviously, if we start to break down below 654, that would be a little bit concerning to me. But as it sits, when we look at this daily chart, we can see that it's just nonstop grind to the upside. Structure remains valid. Momentum continues to be there. But we'll go ahead and look around to see if there are any red flags out there. Obviously, we had that shooter candle on the daily, but when we look at the weekly, last week we did have that doji candle, a little bit of indecision from the buyers and sellers, saying, okay, we don't want to push it too far, but we're pretty much in agreement here, so we don't really want to get too aggressive. And finally, buyers decided to break that on up. So, needless to say, the moves is definitely to the upside. So we'll see if that continues, if bulls can continue to rally. But I do want to make note of that shooter candle. And if we do break that low a day, sure, we can come back down to about that 662 mark. So that is definitely something that I want to pay attention to first, is mainly, 667 and 662. All right, moving on to the NASDAQ. We can see that, yeah, same thing. We are in a major uptrend. Tech continues to be pretty solid. Now, here on tech, it looks a little bit weaker compared to the SPY. We can see that this daily candle is a little bit more aggressive on the selling. So when we zoom into the hourly, we have these two wicks here. Let's see, I can lower that to about 601.50 is pretty much what we're going to call it here. 601.50, yeah, looks good. If we start to break down below that, then the next level to be tested is going to be, we'll say 600, because that's a nice round psychological level. So be aware of 600 as that psych level, and then below that, 596.27. Obviously, we do have some overhead resistance up here at about the 607 mark, so definitely want to be aware of that. All right, moving on to, other than that, we're still in a strong uptrend. 596, 591, 583. Those are your next levels that I have for you. The small caps, IWM, joining the club here, finally breaking out into new all-time highs. Market breadth continues to look like it is expanding, and this is a great sign. If small caps can continue to build upon this rally and push higher, that is definitely a good sign for the overall market. So definitely want to pay attention to the small caps. Now, the one thing I would hate to see is if it was something like what we dealt with back in the COVID days, where small caps had this nice breakout over 234, and then we basically, right here. Sorry, I'm a little stuffy today. When we had this nice little breakout over 234.50, and you pretty much just did a complete fake out and moved down and went sideways for what, over 2 years. So that is definitely something that I don't want to see over here. I want to see this breakout to continue to rally, maybe have a base around this 244.50 mark, and give us some sort of indication that is accepting of those higher prices, and then pushing further up to the 250s and beyond. So definitely something to pay attention to here with the small caps if this rally is going to hold. Moving on to the Dow Jones. Yeah, hit 470.70, which was our original long-term target from back here. Yeah, Dow continues to look pretty impressive. You got a lot of good names out there just making lots of moves. Let's take a look at the VIX, though. Like I said, I'm looking to see if there are any kind of red flags here. And yeah, VIX is very quiet. It's very squeezy, of course. Last time it gets, squeezy, you get these pops to about 19, and then we just kind of shoot back down. So VIX remains pretty quiet. I would just pay attention to these intraday moves to see if these spikes hold. We've seen moves to about 17, and then 17 just kind of dies down. We zoom in here, 1730, 1750. As long as we don't break above this and hold, I'm okay with that. We've seen these moves to 17, and then we just kind of die back down. So that's just been the theme of it. Just be aware of this intraday volatility. We get these pops, and you've seen it in the indices where we get these little bit of a gap up, and then we fill the gap, and then once we get that taken care of, maybe shake out some weak hands or some profit taking, then we decide to move back up. So nothing seems to be out of the ordinary here. Let me take a look at the junk bonds here, the HYG. Now, the HYG is kind of topping off a little bit. You got this rounded top situation here. Something to pay attention to. It's not the end of the world, as long as it's making steady moves to the upside, and as long as we don't really get a breakdown below 80, 50, and definitely around 80. Sounds pretty good to me. So junk bonds holding up. Let me put this support level here for my benefit. Support around that 80 mark here, and we could also mark what about right here, 80, 78. So as long as the HYG and the junk bonds, like I said, if you've watched me for a few times, you know that when I talk about the HYG, what I'm looking at, this is the junk bonds, this is the junk of the junk. If they're willing to buy up and prop up, the bad stuff, the not so good quality stuff, then yeah, it's just it's mainly a gauge to how frothy the market is. If they're buying up the junk, that's good. If they're not really buying up the junk, yeah, that means the market's kind of like kind of questionable. If we look at the LQD, which is your A grade stuff, this is your top tier rated stuff when it comes to bonds and all that kind of good stuff. When we look at the LQD, we can still pretty much see the same thing. It's primarily in an uptrend. It's holding above 111. Not seeing too bad warning signs there. It could be a little iffy depending on which way this wants to break. So definitely something to be mindful of. So there may be some caution here. Nothing too serious that I'm seeing as of right now. Add that in with the VIX, could be a little interesting. Like I said, as long as VIX doesn't stay above 17, if we start to get daily closes on the VIX above 17, then we could probably argue that maybe there's a temporary top on the SPY, especially, with the government shutdown. But we have seen in the past, let me see if I can find it real quick. Here we go. Let's see. Let me open this real quick so you can see it. Here we go. Where are you at? Right here. All right. When it comes to government shutdowns, I'm going to zoom in. It doesn't matter. Stocks don't seem to think too much about it historically. Trading days, back in the 90s, there's 5. Average return was over 1%. Back in 2013, the government was shut down for 14 days. Return was 3%. And back in 2018, 2019, when the government was shut down for 22 days, yeah, look at that. The return was 10%. So, yeah, the market's not too concerned with it right now. So, it is what it is, especially on the historical side. All right, let's take a look at some charts here, individual names. I like Apple. Apple is having a pretty decent move. You got this nice little tight bull flag at around the 250s. It seems to be accepting this right here. I'm looking for a push over 260 towards about 265 on the all-time high breakout here. Obviously, we also got some really good metal names such as AEM. I do like APP. AppLovin looks pretty strong. Baba looks pretty good. I'm in JD. JD continues to look pretty solid as well. Let's look at... Let's just kind of keep looking around here. CM. There's lots of good charts out here. Tesla. All right, look. The thing about Tesla is it hit almost a little bit of this double top here, but obviously it's not too confirmed here. It's just pretty speculative. But look what we did. We came all the way back down to 420, held this zone here and bounced pretty hard, closing right up at that trend line. So I'm curious to see if Tesla can use this moment. Maybe some longs got liquidated here, some weak hands got shaken out, and now it's ready to push up. But if we start to break below 420, that could be concerning. Break below 420, we'll start to see 400. Below 400 reopens the door to retest 367. So I am paying attention to Tesla. Microsoft continues to look pretty good, consolidating, basing out around this 515, 517 zone. If we can get a push over 520, I'm looking for a move towards 533. Looks good there. Obviously, you got names such as Hood being extremely strong. Now, a lot of people are going, well, if Hood's making the move, then Bull is also going to do that. That is absolutely not the case. I'm staying away from Bull for now. I'm not going to try to pick a bottom here. Look at this. When we put the anchored VWAP at this all-time high, we can see that price continues to reject it. So this is not what we see, strong leadership names do. They're making new all-time highs. Bull has a lot of dilution issues. It's just not the same. The Hood is in a different category than Bull is. So just because Bull is cheap doesn't mean it's going to have a crazy rally like Hood has had and pushed back into all-time highs. That's not the case. Fundamentally, that is not the case too. Now, from a technical standpoint, if I'm going to buy Bull, I would much rather see it get above this anchored VWAP over the 1568 mark, finally clear that level. But also, I need it to get above 18. It's got to make a higher high. At some point, it's got to close above that 18 level. So that's what I'm looking for on Bull. I'm not buying down here. It's just a headache right here. So why am I going to put my capital to give me a headache? That doesn't make sense, does it? So gold continues to be impressive as well. If you're playing gold miners or anything gold, that looks pretty good. Let's take a look at Intel. Intel had that nice little rally here. AMD, I like AMD. AMD, I was a little angry at AMD because I was looking for a push over 164.67, and then we got that gap up. So now that we got that gap taken care of and we're retesting this, I'm looking to see if this area is accepting of these prices and then push back up to about 173. So I'm curious to see how tomorrow goes. If tomorrow goes bullishly well for AMD, I'm willing to get into a long position to push into higher prices. So that looks good. There's also, MU looks pretty good. A lot of the semiconductors just in general look pretty good. Energy and utilities, definitely pay attention to utilities. Utilities are breaking out. Look, you need energy. You're going to need those utilities for those data centers and all that. So XLU looks pretty good. One name, Duke Energy, looks pretty good to me. Other than that, there's still so much out there that looks pretty solid. So I want to continue, be picky. It's okay to be picky here. The market's at all-time highs. Make sure you're being selective about your trades. Any longs that you are in solid profits on, be sure to raise your stops. Sorry, my dogs are working. Be sure to raise your stops, trail your stops. Don't let a good thing go bad. That is the key thing. Again, be mindful of the news, government shutdown. Just pay attention. Just be aware of your surroundings for the most part. There's so many good names out there that are making new highs. Find that relative strength. Play the levels. I've given you plenty of levels here on the S&P and the Qs. You can use those if you like, or just use your levels that you play off of and go from there. All right, guys, that's going to be it for me. Enjoy the rest of your Sunday. Have a good rest of your day, and I will see you all on the next one. Take care. Bye-bye.